A lot of traders think that they really understand the market and why certain things happen, but they're really just memorizing different things. They're memorizing almost like they're studying for a test, and the knowledge is very surface level. And when you're just memorizing patterns, you're not really understanding the market to its core. And when things change, you don't understand really why or what's going on. And so what I believe is the secret to becoming a consistent and very profitable trader is to reduce the market down to first principles. I don't care about why behind a move. Everything for me is price and volume. But stock's up 20% on very big volume, I don't so much care why, but I care about the why behind the pattern. High tight flags, cup and handles. When I started trading, I would try to memorize patterns like this, and I was thinking too rigidly. I was basically trying to memorize it like a checklist, and instead of understanding why they happen, why do these patterns repeat themselves, why do they work, I am not really understanding the market at its core. And so for me, what really helped me in my trading journey was reducing patterns, different things that play out in the market, to first principles. Why does this pattern work, right? Cup and handles. If these have been forming since the beginning of the market and they're still forming, there's a why behind that. So I encourage you to just think about what moves a stock? Why do stocks move? Why do these patterns keep forming? And when you ask those questions, you'll understand what everything in the market, every pattern, every stock, every trend, you'll understand what it has in common, and you can really start to see the market less black and white and more for what it really is. That's a beautiful thing because it really gives you the understanding to be a lot more flexible with your approach. If you follow me on X or you've seen any of my interviews on the Traderline channel before, you know that I have a pattern that I love to call the character change. Now, the character change looks for three things: big volume, a higher low, and then new 10 or 30 week respect. Now, if you are trying to find character changes on your own and you're using these three as a blind checklist, when it works or when it doesn't work, you're not going to really understand the difference, right? You need to understand why those three components I watch for in a character change. When you understand why each of the three components are there, you'll have a deep understanding at your core, which will allow you to see things that I might not see or see things that someone else might not see. If you were studying a famous trader and you're kind of using what they teach as a checklist, you're not understanding. But if you understand why they do what they do, why they look for what they look for, then that's how you really are able to adapt what you learn and kind of put your own spin on it and make it work. I want you to think about the big volume, the higher low, and the new 10, 30 week respect in my character change. Why do all three of these play a role in this pattern that I look for? Big volume, this is number one, right? So my character change setup basically looks for stocks that have been bottoming and are coming up the right side and showing signs that a new trend is very unlikely to be getting started. Basically a new stage 2 trend, if you're familiar with Stan Weinstein. Now, if we break this down into the three parts, why do they each exist? Big volume, this is because volume drives the market. Big institutions are the ones that move the market, they move stocks, and the big volume is telling us, okay, they're here, they're accumulating, and that's the first reason that I look for it. So instead of just memorizing, oh, the character change needs big volume, understand why the big volume plays a role. The next one is I look for a higher low. The higher low is just because if you have a stock that's in a downtrend, and a lot of times in a downtrend, you will get the big bounces, the oversold bounces, and a lot of times they fake people out. And what happens is the bounce gets sold into, and then the stock makes a new low. So when you do get a higher low and the stock does fail to go lower, this is at the simplest form a change in the trend. When you have the higher low after the big volume, This is now telling you, okay, the volume is big, institutions are involved, and now we have a new higher low. The trend has changed. This is valuable information when you understand, why they each play a role. The third part is new 10 or 30 week respect. This is the last piece, and it gives you a good place to manage risk. And when the stock is showing new respect for the 10 or 30 week, it's a change in character. Previously, the stock has been either underneath the 10 and 30 week. And so now that we're above it is a big change in character, right? We have the first two components, volume, meaning institutions, and the higher low. And now the first time the stock is above it versus below it. It's another cue of a change in character. And most importantly, the 10 or 30 week allows you to really get a good entry while managing your risk. So if you're trying to find character changes and you're using these three criteria as a checklist, then you're never going to understand deeply really what's going on, and you're going to fail to adapt and understand why some of them work sometimes, why some of them don't. And to feel comfortable in the market, you really need to understand what's going on, or else, you're just going to be lost, and it's not fun. You'll basically always miss the bigger picture. But when you simplify every pattern, whether it's my character change or a cup and handle or a high tight flag, when you simplify every pattern down to why does this pattern play out? Why does this pattern work? You'll become a lot more natural in the market. You'll be able to adapt, and you'll be able to make sense of the different environments and really make progress. When you simplify every pattern down to the why and understand, the mechanics at the core, you'll become a lot more comfortable in the market, and it'll have, a really big impact on how you do. But also, it's the only way to have a long trading career. If you're just memorizing and trying to study things like a test, it's going to be very short-lived. So understanding the why and breaking these things down to first principles is something that is very important to me, and something that I like to always share with people so that they can just kind of look at things a little deeper. This first principles thinking and looking into understanding the patterns deeper is how you build real trading confidence in the market, which is incredibly important for not just longevity, but also conviction behind trades, knowing when to maybe be more aggressive or less aggressive. I hope that this makes sense. It's something that I share with everybody, and I always believe in less is more in trading. Especially with my trading, I like to keep things as simple as possible. And when you actually break things down and understand market mechanics and why, you are able to simplify things a lot more, and you're able to understand the market instead of trying to just memorize different things. And it really makes all the difference. So I hope this video was helpful. This is the first video made specifically for my new YouTube channel. If you are interested in more concepts like this and me diving into, a lot more specifics, please hit subscribe, hit like, and I will see you in the next video. Thanks, guys.